There is this interesting effect in crypto. A project might be technologically inferior, but just because it launched early, just because it was the original idea, everybody got into the project, the market cap rose massively, and now the capital tends to concentrate towards that asset. This is definitely the case for Dogecoin. There are hundreds of meme coins that get launched every single day, yet Dogecoin is by far the largest meme coin. The question is, does it make sense to buy Doge now? Let's have a look at its performance relative to competitors. Let's have a look at what point in time historically was a good time to buy, and when, for what kind of indicators does it make sense to potentially take profit. Now, this is not the first video on Doge on this channel. The last video was published only 11 days ago, and it still outperforms the average video on this channel. So there are enough people that search for Dogecoin regularly. Dogecoin is by far the leading meme coin. So this is an overview of all meme tokens across all chains. Dogecoin has a market cap of 33 billion. Number 2 is Shiba Inu. Then comes Pepe. And then the largest Solana meme coin has only 2 billion in market cap. So that's less than 1/10 of Doge. And of course, the price development of Dogecoin is very similar to a degree with other meme coins. We see this massive rallies and subsequent dumps. People don't want to hold meme coins long term, they simply just speculate with it. And because of that, volatility is very, very high. Now, this is a Dogecoin chart measured in US dollars on a linear scale. But this doesn't really show us how much percent changes happen, because this over here, that's a 500% change, but this over here is only a 70% change. So really, we are interested in percent changes, right? How much do we gain and lose? And that's why we look at logarithmic scales. So here now, a horizontal difference represents a constant percent change. Everybody that held Dogecoin during 2021 made massive gains. Since then, we tend to go sideways somewhat. But there's another problem with this chart, because in crypto, there's a lot of correlation, right? When Bitcoin goes up, when Ethereum goes up, many altcoins go up as well, and vice versa. So in the end, it's actually about relative performance. Do we outperform by holding Dogecoin versus just holding Bitcoin and Ethereum? And so that's the very first relative valuation chart in this video. This is Dogecoin relative to Bitcoin. Again, 2021 was great, but then came the subsequent dump. And every now and then we see rallies that might be partially news driven, right? Elon Musk might be pushing his bag. But in the last 2.5 years or so, Doge relative to Bitcoin has stabilized somewhat. And it might make sense to buy somewhere on the lower end, of course, where the downside pressure isn't that massive anymore. And then it's all about probabilities, the potential risk versus the potential reward. Here's a chart I like even more, because most altcoins have more correlation with Ethereum than with Bitcoin. So when Ethereum goes up and down, then the altcoins go up and down in the same manner. This connection is stronger for the altcoins to ETH versus the altcoins to Bitcoin. And over here, we see somewhat of an inflection point that happened in February of last year. Dogecoin started to outperform Ethereum. The question though is if this floor will hold. I personally have my doubts. I think there's a good chance that we're just going to deflate again to our regular price range around here. So the short-term underperformance of Dogecoin relative to Bitcoin isn't really that high, but relative to Ethereum, it's much higher. And this does make sense, because Ethereum now sees all of those inflows from Wall Street, right? If we analyze the last 14 days of Ethereum ETF supply absorption by Wall Street, we get to close to 22%. Wall Street is buying Ethereum like crazy. Wall Street is also buying Bitcoin, but not at the same rate. There's only an annualized supply absorption of 3.6%. And we do have our occasional days where Wall Street is actually selling. We do not see that for Ethereum. And so I don't believe that Wall Street is going to buy Dogecoin anytime soon. First, they have to roll into Solana. That already takes much longer than most people expect. Thus, I do think that Dogecoin will continue to do worse than Ethereum. Will it do worse than Bitcoin? It's not that clear, but the buying pressure of Ethereum is definitely very high. And really, does it make sense to hold that much Dogecoin if Ethereum currently is that much on a run? Again, the correlation is very high, and it might make sense to pick up Doge rather in this area and not where it is right now. So potential underperformance of maybe around 40% or so. Ethereum relative to Bitcoin is clearly on a run right now. Now, just because it's likely that Dogecoin is going to underperform Ethereum in the near term, does this also mean that Dogecoin is a bad investment within the altcoin? So if we compare Dogecoin to the rest of the altcoin market, are we going to see outperformance? There are several ways to look at this. This is Dogecoin dominance. So how much of all of crypto is currently in Doge? And this tends to move somewhere between 4% and 0.6%. Currently we are at 0.85%. We are not at historically low levels, but we aren't yet heated either. So the best purchasing opportunities probably happen after an additional underperformance of 10, potentially 20%. That's when we get really low again. Currently we are not yet at those low levels. The issue with the measure of Dogecoin dominance is that we also include Bitcoin and Ethereum in the mix. But if we just want to look at Dogecoin relative to the altcoin market, it's probably best to compare market caps. So the Dogecoin market cap relative to the Others market cap. Others is a measure in TradingView that looks at the market cap of all the altcoins that are not in the top 10. And here again, we see an interesting trading range. We see a potential top, we see a potential bottom. And within the altcoin market, Dogecoin isn't necessarily that cheap right now. Historically, we have been much lower. This could be a drop of more than 50%. The bottoms were in February of 2024 and in March of 2022. And I just like these kind of charts. I just like them as a potential gauge to estimate risk versus reward. It's actually not that hard to plot this. So you simply go to tradingview.com, you click here at the top right, and then you're simply entering Doge/others, and then you hit enter, and then you get exactly this chart. Now, crypto trading has evolved recently quite a bit. In the past, there was a lot of spot trading volume. People traded either on the centralized or decentralized exchanges the tokens directly. Now, because it's cheaper, because the slippage is smaller, people tend to trade the perpetual futures more, especially for the well-established tokens. Now, what that also means is that funding rates are very, very high and that long-term holding becomes less prevalent. So capital rotates from one token to the next more quickly. And so that's then where the price discovery happens, right? Wherever currently the short-term leverage is, that's where the price is elevated. Whenever leverage deflates, the prices tend to go down as well. In the last 24 hours, we saw 455 million of spot trading volume on a centralized exchange. But compare this to the perpetual futures. Here we had 1.6 billion worth of trading volume. So really, the price discovery happens on the bets on the price, on the perpetual futures. This is where the market moves. This is where the capital pushes the prices around. And so let's have a look at this. On average, the longs have to pay the shorts, so most people on the perpetual futures are betting on rising prices of Dogecoin long term. And money flows in and out of the asset regularly, right? So what we see here in green, that's the open interest, as in how much capital is currently in Dogecoin via perpetual futures. And just have a look at how much this correlates with the spot price. The spot price goes down when leverage goes down as well. And currently we are rather high, historically speaking, on the open interest. We are at 4 billion. In the past, we peaked at 5 billion. So again, this shows us potential downward pressure. Very similar to what the Doge relative to the rest of the altcoin market showed us. Here's the trading volume of perpetual futures of Doge over time. Again, this correlates with the price quite a bit, and it is not at low levels. And here we've got the liquidations. The price isn't moving too quickly right now, so liquidations are rather on the lower end. But still, it's all about short-term leverage that's currently moving the price. And Dogecoin isn't really that attractive of a bet to buy it today, to hold it long-term, at least compared to other altcoins. Even though it's not directly comparable, why not just buy Ethereum, right? It gets bought up by Wall Street left and right, and it outperforms everything else. There's really no need to take on additional risk in this market. This again is Ethereum relative to Bitcoin. I do believe that Dogecoin will lose against Ethereum in the next months. The general problem with crypto as a whole is that there's more and more token emissions. So a lot of projects launch and the founders want to pay themselves. The early investors, the venture capitalists want to pay themselves. Maybe there was also some marketing expenses. So some YouTubers might get an allocation and then sell the token. And the retail investors have to support all of that selling for the the prices to stay stable. This here is the weekly token emissions of the entire altcoin market that's tracked on this website, Tokenomics.ai. And it's pretty much above $600 or at least $500 million every single week. If the inflows into crypto are slower than that, then the altcoins have to go down, at least relatively speaking. For example, have a look at this here. This is the DeFi protocol 1inch. So it's a decentralized exchange aggregator. It got a lot of usage in the past. But the problem is that the circulating supply grew massively as well, right? From 100 million to now 1.4 billion. And that then leads to 1inch doing much worse than Bitcoin or Ethereum. This is 1inch relative to Ethereum. Or have a look at this. This is Optimism, right? A leading layer 2 scaling solution on top of Ethereum. It started out with 214 million tokens and it's now at 1.6 billion tokens. And that's the long-term chart relative to Ethereum. And so there are several consequences from this, right? We cannot afford to own a lot of different altcoins because the vast majority of altcoins underperforms Bitcoin and Ethereum most of the time because of that token inflation. But also picking a single winner here and there is very hard because, again, most tokens do worse. So it's like picking the needle in a haystack. Some people simply just stick with Bitcoin, Ethereum and Solana then and forget the rest of the altcoin market. But I actually think there's an opportunity here because if we have constant underperformance, we can bet on that. We can bet on the underperformance to continue and make money from that. So instead of getting this performance by buying 1inch, we flip this around. We bet on falling prices of 1inch and bet on rising prices of Ethereum at the same time. So this is the same chart, just flipped. And this is simply using decentralized finance to do exactly that setup. We are betting on Ethereum to outperform 1inch. Same here for Optimism, right? Instead of buying Optimism, we are just betting on falling prices of Optimism relative to Ethereum. So in the last year, that position performed 150% roughly. Now try to make 150% in a year just by plain simply buying an altcoin. It's much easier said than done. Yes, there are some outliers. There is this Aerobot and this DRGN and this SNSY token, but the vast majority of altcoins is just going down. And so instead of trying to find the next Aerobot, I think it's better to just flip this around and everything that's red becomes green and everything that's green becomes red. So then we've got the odds in our favor. We don't try to pick the needle in the haystack. Instead, we bet on the haystack, on the vast majority to do poorly. And again, there is a fundamental reason for that underperformance, right? It's all of those insiders selling all the time. The venture capitalists, the team, etc. Maybe even the users of the platform that get incentivized in tokens to use the platform. Have a look at the altcoin market cap relative to Bitcoin in the last 3.5 years. It underperformed by 75%. And if we flip that around, we've got an outperformance of almost 300%. So this is now Bitcoin divided by the altcoin market cap. I'm following this strategy already for quite a while. What we see over here is my portfolio performance in the last 4 years roughly relative to had I just dollar cost average into Bitcoin. So the Bitcoin dollar cost averaging is in gray and my portfolio line is that one in black. This is monthly data out of my personal Excel sheet. We're now at month 44. I did this mainly with borrowing in lending platforms like Aave and Venus Finance. But recently I changed to perpetual futures and this is even more productive. I started the test 2.5 months ago with 40K and that turned into 60K again just in 2.5 months. And so the premium members of this channel asked me, is there maybe a way we can just provide some capital to you and you do those relative valuation trades for us? And so I opened just that. It started 6 days ago, so there's no real sample size yet, but so far it has made 3.5%. I'm happy if we do 10% per month. I don't think we'll make 50% in 2.5 months again. But in general, we are moving in the right direction. And again, it makes a lot of sense, right? Most altcoins do worse than Bitcoin or Ethereum. We don't really have to be that scientific about it. If you want to learn how to become a winner in crypto and how to set up those relative valuation trades, where then the VCs and the insiders don't dump on you, but you're actually making money when they are dumping, then feel free to check out all of those tutorial videos, right? There's more than 100 tutorial videos in premium. I'm of course sharing my own trades as well, and then you can simply copy trade and take advantage of those trades as well. There are many opportunities out there, so feel free to check out the community as well. And so if you're an active trader, you can simply sign up for the monthly membership. It's $125 per month. You can watch all the tutorials, you can copy trade me as well. And once you're joining, I will also share my favorite trade. And if that favorite trade doesn't make you money in the first month, I will refund you 100% of that membership fee. So really, you don't really have a risk of joining here. You're either making your money back or it's for free for you. If you are not an active trader though, and you simply just want to allocate capital, you've got more capital than time, then you can sign up for the annual membership. Here you also get 2 months for free, so $250. And with the annual membership, you also get access to the automated copy trading feature, where you can simply just send money to Hyperliquid. So that's the platform that I'm using. And you get the exact same trading performance that I'm getting as well. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.